My name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of LME 3-month copper and aluminium. I'll start with LME 3-month copper. An indecisive doji cross on Friday, but this can tell you loads if taken in its right context. You see, Thursday was a key reversal up, and though Friday did manage a small move higher, it was beaten back by the seemingly overwhelming forces overhead of the February high at 96.17, the flatlining medium moving average currently 94.83, and most recently by the optimized May to date downtrend currently at 94.59. All these managed to capture what would otherwise have been, I am sure, a good bullish day and turn it right around. You see, as I mentioned last week, we seem to be perhaps becoming to a cusp. During my annual leave over the last 2 weeks or so, this market has gone sideways with a slight upwards tendency. In that time, prices have been bracketed on the top side by the previously mentioned resistances and below by the rising support from the October 2020 to date uptrend, currently at 93.24, the medium moving average as well on occasion, and the 50% Fibonacci line for 2021 at 92.26. As you can see from the closeness of the prices, it is all seemingly coming to a cusp, and soon. Hence, why yesterday's key reversal up seems to be a false move higher. This now highlights, or rather not yesterday's, why last week's daily key reversal up should be a false move higher. This now highlights a question I posed just before my annual leave. Is the action since the drop in mid-June a possible bear flag? There's a big question mark on that. So far today, a significant gapping move lower, possibly as there has been a move down below the October 2020 today uptrend. But that has been all. So far, we've really not managed that much with a significant move down. So just watch that downside just in case though. LME 3-month aluminium. A third bearish black crow on Friday and a follow-on lower to the previous session's key reversal down. Originally I was a bit nonplussed about the move lower, as after a good 3-day bearish evening doji star pattern the previous week that ultimately led to that week being a weekly key reversal down, we then saw the early part of last week starting to move back up. A bit disappointing. It was only towards the end of last week that we saw what looked like a bearish move of significant stature, even if it was a bit small. Even then, the market got itself entangled in the broken uptrend, currently at 25.14, that formed the trend line of the recent May to early July imperfect sideways triangle. Seems to be the nature of current action actually here, imperfection. Anyway, we still have, from before my annual leave actually, the very provisional target X in the 25.85 area for the imperfect sideways triangle. Now prices came close to it last week but have now shied away. Now I'll still leave target X there for now. You see, it still applies with what I said at the time of placing the original target. That is, if and when we get there, I may look at the action and see if the whole of the April to date action could be seen as a complex double top, double bottom type action. So far today, a significant move lower, down through the upper trend line of the sideways triangle, plus support at 24.78 and 24.68 plus. More importantly, down through the flatlining short medium moving average, currently at 24.68. Now we did similar to this 2 weeks ago and pulled back up almost immediately. So watch the next day or so to see if something similar happens. The actual next support is down at the low of 2 weeks ago at 24.32. Then at the old lower bull channel line, currently at 24.21. And then the rising medium moving average, currently 23.75. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.